Hi everyone, this is Samdi Globally. Hope you're all doing well. Today I'll be doing my weekly video. Let's start with Monday. On Monday, S&P 500 and NASDAQ both rose. Dow was flat, and NASDAQ had its best start of the year since 2009. The 30-year yield, which is a key benchmark in measuring the borrowing costs across the economy, went to its highest price since November of 2023. And oil prices fell after its 5-day winning streak, and the Bitcoin topped 102,000. Let's get to Tuesday. On Tuesday, the ISM services data and the job openings data were both higher than expected. These two better than expected data added inflationary pressure. There's pessimism in the market, with more traders betting that the Federal Reserve's interest rate plan is going to slow. All three major indexes were down. NASDAQ is down nearly 2%, and Russell 2000 also dropped. 10-year yield is up, and 30-year yield kept climbing. Let's get to Wednesday. On Wednesday, major indexes fell after the better-than-expected ADP employment data. The 10-year yield hit its highest intraday high since April of 2024. Also, the yields, which typically rise when the bond prices fall, have been sharply climbing since early December, mainly because of strong economic data and also bets that President-elect Donald Trump's populist agenda would put upward pressure on inflation and also budget deficits. The steep climb of yields can destabilize the stock market with lifting borrowing prices and an increased risk-free return, which investors can get with holding their treasuries up to maturity. The safe return can make riskier assets like stocks appear more expensive. And let's get to Thursday. On Thursday, the U.S. stock market was closed for Jimmy Carter's memorial, and the bond market closed early. Let's get to Friday. On Friday, the U.S. economy added 256,000 jobs, which is well above the expectations of 155,000. And the U.S. unemployment rate ticked down to 4.1%, which also topped the expectation of 4.2%. This shuts the door of interest rate cut in the January 28th and 29th meeting, and also reduces the chance of interest rate cut in the March meeting. And all three major indexes fell 1.5% or more, which shows that investors are not concerned on a strong U.S. economy, but more on how the jobs report is going to make the Fed react. S&P 500 wiped its 2025 gains. Dow wiped all of its gains since the post-election. And financials, technology, and real estate all rose all fell because as they are interest rate sensitive sectors. Insurance stocks dropped as the Los Angeles wildfire is seen to be the most costliest blaze in U.S. history, according to estimates. And for the overall week, major indexes ended the week lower. For next week, on Tuesday we have PPI, and on Wednesday we have CPI data. On Tuesday we have earnings of Wells Fargo, Morgan Stanley, and JP Morgan Chase. On Wednesday, we have United Healthcare earnings and Bank of America earnings. And that's it for today. Thanks for watching. Bye!